What's going on, YouTube? It's Money Mayor back here with another fire video for you guys. And in today's video, I'm going to be telling you guys all about trend lines and counter trend lines. Um, my goal, my goal by the end of this video is for you guys to sit there and better understand trend lines and counter trend lines overall. So the main three topics I'm gonna sit here and go over is what makes a true valid trend line and counter trend line. What to do once price does come in contact with these trendline opportunities, and what to do once price does sit there and decide to break out and beyond these counter trend lines and trend lines. So those are the goals for this video right now. If you're not already subscribed to this channel, go ahead and hit that subscribe button right now because more content is going to be coming like this every week. And go ahead and leave a like right now on this video. You know, it's going to be a lot of helpful content in this video. So leave a like, show some love to the channel. Let's get straight into this content. Let's get it. Okay, so what exactly is a trend line? Well, a trend line is used to visually track the overall trend of the market. A trend line also needs two candles to close past the trend line to sit there and confirm that it's no longer valid. So while the market is trending, you know, say we're in a bullish market right now and price is sitting here making higher highs and higher lows such as this, you can sit there and place a trend line under this overall bullish trending market at its higher low points like this to sit there and track that overall bullish movement of the market. You know, you see here in the both tab, the both section right here, that both trend lines and counter trend lines are used as a form of sideways support and resistance. So in this case here in a bullish market, a trend line is used to sit there and it's used as a sideways form of support. And if we're in a bearish trend where price is sitting here making lower lows and lower highs like this, the overall trend is bearish. So the trend line that we're going to be using is going to be used at the lower high points, and it is going to be used as a form of sideways resistance because price sits there and continues to bounce its head off of it, and price sits there and continues to get lower and lower. Identify trend line opportunities within the actual foreign exchange market. Well, I've been sitting here back testing and I found this example here that I'm going to sit here and demonstrate to you guys. We're on GBP JPY and we're going to be using a trend line, in a bearish type of market. You can see from this point here where we were making high low points all along this price, and we had a break of a support around this area, which ended up leading to this overall downtrend here. So if I sit here and mark up this clear market structure here, this is a lower low here, and this was price's first lower high. Then we have a new lower low found down here, and we have a lower high found here, and then we start forming high low points and lower high points just around this area where the counter trend line eventually did break out. But this is just an example of how you can sit here and use a trend line to your advantage. So once price did break structure around this area and settled and found its first support around this area, we had a first lower high point formed around here. And this was just that first area of resistance where price sat there and was able to sit there and continue this overall downtrend and push downwards to sit there and create this new lower low. Now we're here within price, and price is under another impulse to the upside, and we're trying to find an area where price can sit there and bounce its head off to sit there and continue the overall downtrend. Now price does find a resistance around this area, and us knowing that we did previously form a lower high point around this area, we can sit here and try to find some confluence around this area and extend a type of trend line to sit there and track this type of bearish momentum using this sideways resistance called a trend line opportunity. So you can clearly see that once price does sit here and finds this trend line opportunity here, it was respected multiple times within the future in price. And that's just simply because once a trend line is being respected, the more taps and rejections that it does get off, the stronger it becomes. And this, just the more clear it becomes to other traders. So that's what you see around this case. You know, once price did make this point A, this is what's considered point A within a trend line opportunity, and then this point B. Once you get point A and point B, all the other points are just those points that I was saying that make that trend line even stronger, and more people can sit there and be able to see it. So this is just what makes a trend line valid. You know, once you have a point A and B, your trend line is valid, and you're good to go and trade according to that trend line you're seeing. But how do you sit here and execute trades just based off this one trend line opportunity? Well, you know, you just sit there and look at the candles that are formed around this area. So around this area where we got this point B is a perfect area where we would like to sit there and try to enter some sales. So we see that we get a support forming around this area once we have a bullish and bearish candle closed around this area. I'm going to draw a random line around this area to sit there and indicate that, okay, we do have a form of support found around this area, or resistance, sorry, and that price has bounced its head off or something. So now I'm going to sit there and transition to the 1 hour time frame and let you guys see what is exactly happening around this trend line opportunity within price. So this random line is where we were, and you can see on the 1 hour time frame we were in a short-term uptrend. Price was making higher low points, letting you know that price was in the overall correction phase, which it was in. And you can see here that price had formed support areas around here, found a support here, made a higher high, found a support here, made another higher low, found a support here, another higher low, and then we had this lower high point formed here. And this lower high was simply formed just because of the fact that we came in contact with this trendline opportunity. And other traders are seeing this and they're like, okay, we can have a possible sell-off from this price. Other influences that I see around this price to sit there and take advantage of some sales is that we had a break of this random support around this area here. We had a breakout of that support. Price ended up coming below that support, finding a new support around here. And then we sat there and gained some bullish volume to sit there and retest that broken support, now turn resistance. And this is the area where I'll be looking to sit there and execute my first sell opportunity based off that trend line being respected on the 4 hour time frame. Some other influences you see a clear bearish engulfing. This bearish engulfing right here, where this bearish volume engulfs this bullish candle here, clearly lets you know that sellers are in control of the market, and you can sit there and go on your lower time frames like your M15 or M5 and look for some type of selling opportunities to sit there and take advantage of, you know. And I mean, from that retest, I mean, of this support now turn resistance around this area, GJ dropped 284 pips. Like, you could have sat there and caught as many of those pips that you wanted if you sat there and understood why price was sitting there selling off around that area. And it was just because of this trendline opportunity. So like how I was explaining, that was just a way you can sit there and execute some type of sales using this trendline opportunity. We sat there and seen it and took advantage of the sales to sit there and take advantage of this move here. But you know, as you can see, eventually in the future price, this trend line eventually did get broken, and buyers sat there and had their little fun and sprung out and took advantage of that break of that trend line, right? So how have you been in this situation to sit there and take advantage of this trend line breaking opportunity, right? So as you can see, I have this counter trend line plotted right here to sit here and track this bullish pressure, because once we sat there and found a support around this area and a double bottom type of formation around this area, that's letting you know that, okay, buyers are trying to push price up higher than the original lower high we formed around here. So just following simple market structure from this point here, we have this double bottom formed, which sat there and led us to a new resistance. This new resistance is still considered a lower high within price because it isn't higher than this previous lower high here. So price is still gradually decreasing. But at the bottom end, price is gradually increasing, trying to push buyers up to the upside, right? So you're seeing this and you're seeing that, okay, now price is very close to breaking this lower high point. And once this lower high point is broken around here, that's a break of structure. So you're seeing this and you're still seeing higher low points being formed around this area. And you can see around this area, once price was being very close to breaking this type of structure, we have a lot of small and decisive candles where buyers and sellers are just sitting there really trying to manipulate price and really trying to force price to go the whatever direction most traders are seeing the market at this point in time. So what I'm gonna do here is sit here and go on lower time frames and see what exactly is happening structure wise on the 1 hour time frame to let me know how I can sit there and take advantage of the break of this trendline opportunity. So on the 1 hour time frame, we see price from this point was making lower lows and lower highs, and then we had a break of a lower high right here, and we started forming higher low points and forming this bullish trend. So on the 1 hour time frame, we're seeing a type of structure play out like this using our Fibonacci tool, where price made a point A, a point B, came down, found a support here. And now just using this structure alone, once we found this support around this area here, price is now trying to sit there and reach this green zone, which is our take profit area, right? So on the 1 hour time frame, that is our type of structure we're looking at, right? And buyers are going to be looking to try to sit there and fulfill that type of structure to play out on the 1 hour time frame. So on the 1 hour time frame, I'm just sitting here trying to see if we sit there and maintain these higher low points on our lower time frame. And that's exactly what we are doing still. We found a higher low point around here. We found one here, which ended up getting respected right here. We found another one around there, another one there. And by this time, price had already broken past the trendline opportunity, right? But these are just things you can be sitting here looking for to take advantage of the break of this trend line, right? If we go back on the 4 hour time frame, you can go back and look at these very small volume candles and already see that, okay, like I said at top, a trend line takes 2 candles to close past it to confirm that it's no longer valid. And you can clearly see around this area, we have one candle. This is a doji type of candle, which is retesting that broken kind of trend line on the 1 hour time frame. So that's one candle, and we have another bullish candle here, which is letting us know that, okay, this trend line is broken and it's no longer valid. This candle closed at 1 a.m. So once 1 a.m. closes on the 1 hour, I'm looking for nothing but buying opportunities on this pair right here at that time. And if we get back to that area that we were at and see exactly where 1 a.m. closed at, which was on this candle here, you can see that we were still sitting on these higher low points and still in a bullish type of market. And you could have took advantage of any type of buying setup on lower time frames. I'm not going to go on those lower time frames because I don't even know how cluttered my chart is going to look just by looking at that small area. But just know that you have bullish volume around this area. A bullish engulfing is closed right here at the close of the London session candle, which is at 3 a.m. So at 4 a.m. you have nothing but bullish confluence to sit there and take advantage of some buys. And you could have sat there and took advantage of that bullish engulfing and seen anywhere from 100 pips to 200 pips, depending on how long you're willing to hold these buys once that trend line broke out. But this is all really I have to say about trend lines. Let's transition to counter trend lines and let you guys know how you can sit there and take advantage of those type of opportunities. Okay, so to sit there and start this breakdown on counter trend lines, we have to first understand what a counter trend line is. And a counter trend line is used to visually track the market when it is in a counter trending phase, to sit there and trying to find its new support or resistance or its new lower high or higher low point, depending on what type of market it is right now, with whether if it's bullish or bearish. Another thing about counter trend lines, it only takes one candle to break, sit there and confirm the breakout of that counter trend line. Unlike a trend line where it takes 2 candles And yeah, so a counter trend line would look something like this with an actual just raw price movement. So say we're in a bearish market right now. One second. Say we're in a bearish market and we're trending like this, and we start forming higher low points like this at the bottom end. This gives us a perfect opportunity to sit there and add a counter trend line, to sit there and track bullish momentum until the whatever time frame you're on finds its true resistance on this bearish trend, to sit there and continue its overall trend to form that new lower low point, right? So you can sit there and add a counter trend line at higher low points in a bearish trend to sit there and track the overall bullish trend or the bullish momentum in this overall market at the time. You put them at higher low points within a bearish trend, and if you're in a bullish trend where price is making higher highs and higher low points, and say we form a resistance around here and sellers come into the market and start pushing price lower and lower until price does find a support, say around like the 61.8%, then we can sit there and see a new higher high being formed once we have a break of some type of bearish counter trend line, something like that. I mean, counter trend lines, they're really one of my main tools I use when trading, especially on lower time frames. They're very helpful. Like, say if I'm trading on the 1 hour time frame, me finding a M30 or M15 counter trend line is very, very important to sit there and find within my trading strategy, because once I have a break of a counter trend line, I can sit there and enjoy this sell-off profit around here, or I can sit there and enjoy this buying profit once we have that breakout of the counter trend line. So this is just a little quick visual on counter trend lines. Now to sit there and transition over to actual price and find the actual counter trend line opportunity. So here goes an example of a counter trend line opportunity that I found on GJ on the 4 hour time frame. These orange zones here are my 4 hour support and resistance. So we had a breaker structure of this bearish trend around this area once we broke this lower high here, and transitioned to overall upward trending market. And using our Fibonacci tool, I sat there and dragged it from our support to our resistance and found that price sat there and settled at the 50%. To sit there and find a support, to sit there and continue the overall uptrend on the 4 hour time frame. This overall support was also tested previously within price around this area, where you can see price had formed some exhaustion. And I just know that, okay, this area is a good area for me to sit here and see bullish volume around this price. So how can a counter trend line sit here and help us to sit there and execute some type of trade on these overall buys on the 4 hour setup? So to start, we need to sit there and find a valid counter trend line. Valid counter trend lines are formed from a point A to B. In a bullish trend, those are lower high points, and in a bearish trend, those are higher low points. Since we're overall bullish right now, our point A would be the first lower high point we see, and it is here within price. And our point B would be the next lower high point we see, our next true lower high point. This would be considered a 23.6 continuation, where price did sit there and continue to find a new support, and then we sat there and made a full 50% retracement to find this true lower high point around that price. To sit there and continue the overall counter trending bearish momentum of this price right now. So that's what makes a counter trend line valid right there, that point A to B. So now I have found that counter trend line. Now how do I sit here and look to take advantage of the breakout of this counter trend line? So like I was just saying, it takes only one candle to sit there and say that, okay, a counter trend line is broken and that price is back into its overall trending phase. And this would be the candle right here that would let me know that, okay, this counter trend line is no longer valid, and I should be looking for bullish type of entry opportunities on my lower time frame. And that's exactly what we're going to do. We're going to sit here and transition to our 1 hour time frame and see what exactly is happening around this price and see how we can sit there and take advantage of this move. So like I said, this is our overall support. We came back down to this support. Still bearish though. We formed a higher low point here. Well, first we formed this lower high point, then we formed a higher low point, which then broke past that lower high point, and we ended up making new higher highs within price. So if I'm seeing this, I'm using my Fibonacci tool, going point A to point B, and I'm seeing prices right at the 23.6%. Well, not quite. You know, this was the candle that broke out, right? So now I'm being patient and waiting for price to sit there and find a true higher low point to sit there and take advantage of the move. And this was that higher low point to sit there and take advantage of the move. Yes, it was a 23.6%, but you had confluence, to sit there and take advantage of this buying opportunity. For one, I can see a clear retest area right here, which are highlighted in red for me, to sit there and take advantage of this move where price broke past this higher high here, came back, used it as a support, and continued price. We also have a clear bullish engulfing where buyers engulf the sellers around this area. And if you look at the time, we are also during the London session, which is where all GBP traders are active and are on the computer and looking to take advantage of some type of opportunity on GJ. And you see the result of that. And really, I mean, this was all just because of me using that counter trend line, you know. It gave me that confluence that, okay, buyers are clearly in control and back in control of the market after coming off of the 50% on the 4-hour time frame at the support around this area. And once I'm being patient enough and waiting for that 1 hour higher low point to be formed, I see that higher low point being closed here. Then I go on my lower time frames and enter on lower time frame higher low points. And it's as simple as that, you know. The one thing I can say about counter trend lines is that they move fast, because buyers are like, this is a bullish trending market right now, and I'm anticipating a buy, like a bullish push. So once I see a break of this kind of trend line, I'm acting quick and I'm trying to get my entry in before price sits there and tries to explode off like it did here, you know. Now, more often times than not, you will see price try to retest a counter trend line. That would have been a little smoother, where like price sat there, it came up, and once we found this red candle here, price sat there, it came back down, retested it like this, to sit there and continue the overall uptrend. But you know, that doesn't always happen. You know, as a trader, you have to just read and react. And in this certain scenario right here, it didn't need the retest of that counter trend line to sit there and continue the overall push to the upside. We got that 23.6%, and price flew. But yeah, this was just a nice little counter trend line example I have found. This is actually recent GJ price, so it's really just recent memory, and I feel like it was very, very clean. What's going on, everyone, and welcome to the conclusion of Trendline Madness. I hope you guys did enjoy this video, and if you did, please sit there and leave a like on this video, and leave a comment in the comment section on exactly what you did learn and what you look forward for from me in future videos, so I can sit there and have other video ideas to sit there and bring to you guys. But this is the conclusion, like I said, and I hope you guys enjoyed the video, and I'll catch you guys next week with another fire video.